Hi, this is Matt McKillen with Innovative Financial Group. A question posed to me today was, how do you make mortgage rate predictions? Well, I've been in the business 21 years, and there's a whole bunch of data that's involved in affecting what happens with our interest rates. And it is very, very difficult to predict. Part of it is based on what the Fed is lending their money to the banks at. Another thing that affects rates on a daily basis is the stock market. If the stock market is actually doing horrible, it actually helps promote better rates for us. So just as it's very difficult to determine what the stock market's going to do on a daily basis because it's affected by daily economic reports or world events, it is really difficult to predict what the short-term or long-term interest rates are going to do. There's many economists out there that specialize in trying to predict that for banks and for the Fed, but really, on a case-by-case basis, we just have to kind of follow along and see what's going on in the industry as a whole and try and get a gut feeling what we think rates may do in any 30 to 60-day period. It's a very difficult call to make. Again, my name is Matt McKillen, and I'm with Innovative Financial Group.